Well, hello folks, I'm L.A. Little and this is your daily NeoTA wrap, where we take a look at these markets and we do it from a neoclassical perspective each time, asking ourselves just one question: what happened today and what does it tell us about the coming ones? I do the show 4 times a week, every Monday through Thursday, broadcast at or before 10 o'clock Eastern Time, archived on YouTube. It's under the channel L.A. Little. You can catch me there. Just subscribe to it up on the right hand side, YouTube. Click on it, subscribe. Anytime content's pushed, you'll be notified, and that's a good thing because there's a lot of content being pushed to that site. As far as these markets, man, talk about pushing. They do keep pushing. If we look at the ending numbers here, we had the Index up again, leading one more time, and I've written articles, I've said it over and over. I don't know how this market continues higher on the back of the Index, and in particular on the back of this particular Index, because if you look at what happened today, it was Apple driving this thing higher one more time. So if I pop up Apple, let me grab that chart real quick here, and let me put it up. You can see this was the powerhouse. You know, this is a huge weighting in the Index. 2.7% move today. Look at this thing since January. I mean, it didn't go anything in January, but when it took off, it took off. It went from, well, we got a price point here of 105, and now we're at 133. That's 28 on a 105. That's about 25%. This is why the Index is doing what the Index is doing. So Apple's the story there, and it's going to have to broaden. It's going to have to be something beside Apple. Apple can't keep going up, 25% every couple of months. Composite up as well as a result of that. The industrials down. The S&P actually lost a little bit, not much, and the Russell finished up slightly higher. If we look over at the gold, silver, they were up slightly, but there really wasn't nothing special. The big news was in the bonds. The bonds got a nice turn today. Bond's been beaten up pretty good, and so that turn in front of Yellen is a interesting setup. I don't know that it's going to carry, but it in front of Yellen, it looks like people are covering their shorts. If we look at the USO, it was down 2.9. Oil was down about 4% this morning. Pre-market closes down about 3, so it's not too bad, but we'll look at that chart. It's down there testing. I don't know if it can break lower again at this point. Dollar was up slightly. Let's go to the indexes. And we'll start with the S&P 500. And, if we were going to look at one thing today, what I would be focused on is what happened at the end of the day, not during the day. So let's look at the chart of that. And when we look at that chart, what do we see? We see a market sold off at the beginning, and this is about the 4th or 5th day in a row they've done this. They press it down, try to break it down, right? And as a matter of fact, if we pull it back, say 5 days, they're trying to break back down underneath this breakout high. This is the S&P 500. So you get a push up, right? You break out, and you start off the day today, and you go straight back down, trying to break it down. Rallies back up, can't do anything. It fails here on another attempt, and then of course it goes down, tries to break it down again, and no. What we're going to do, we're going to ram it right up into the close, and that's how this market ended. So when you look at it on here, what do you have? You have a long tail. You have a long tail on Friday. You have a long tail on Thursday, Wednesday, Tuesday. 5 in a row, folks. Every time they try to break it down, they flip it around, they take it right back up. This market doesn't want to go down. I mean, that when you're looking at a chart and you're looking at these long tails to the downside, that's simply saying, hey, you got a market that simply does not want to go down. If a market doesn't want to go down, then it's going to try to go up, and that's exactly what you're seeing here. If we move over and look at the not the Index, but the Nasdaq Composite, this was negative going into the close. In other words, if we look one more time, look at that same setup I was just talking about. It was the same case on the S&P, on the Nasdaq Composite, as we were talking about with the S&P. They pull it down, they gap it down, try to rally, right? Looks like they're going to try to break it down, and then they just jam it higher into the close. And so, when we look at these markets, what did that do? Well, it saved the day, so to speak, because had that stayed lower, it actually would have been an over, under, or a 2-bar reversal. It looked like it was going to be a 2-bar until right at the end. As a matter of fact, the volume's just slightly lighter, so it would have been, but not the case. They don't let it happen. NDX, exact same setup, went right back up to the highs at the end of the day, about the same volume. And the Russell, long tails here too, same thing, keep pushing it, no volume, but pushing it. SPX, Russell, both of them inside days. NDX, composite, they go over, back under, and then close back over yesterday, or not yesterday, but Friday's high. Says this market's going to try to go higher. If we look at the ox markets, over here we saw some action. I want to go straight to oil because oil continues to try to push lower, right? Inventories are huge. Everybody knows it. They keep trying to push this thing, break it down. That low, 1801, the big low over here where the volume is was 1795. Today we got down to 1802. Pretty good volume, right? We're testing into that with pretty good volume. They're going to try to break this thing tomorrow, and that's where we're going to find out if, in fact, they can. And if they can, I think the XLE is going to struggle again. If we look at the XLE is trying to push back down. It's reluctant, but it's trying to push back down, test back into this little gap area down here. The XLE had pulled up to this swing point high, tried to test it, couldn't do it. The most bullish thing right here is for this thing to hold and push back up. And what I'm talking about is if you can get this push, in other words, if it holds here and you can get this push, it's going to close this gap. That would be the most bullish thing that the XLE could do in the face of pressure in oil. I don't know that it will, but that would be, if you're in that space and you're trying to trade that space, that's the way I would be looking at it. If we look at the dollar's just hanging up here going nowhere. Look at gold. Gold actually tried to push up, failed, came back down, had no volume. Nobody really wants to buy it. Silver, same thing, pushes up, fails, comes back. These are going to continue to try to press lower until there's some catalyst. And right now, I don't know what the catalyst is going to be for this market. It's a real struggle to get these stocks to go up. If we look at the bonds had a nice big day in front of Yellen. That high on the big volume spiked down. 127.93 did 14.9, almost 15 million. You're doing 7 on the way up. You get 127.99, so you're over it, no volume. Tomorrow will be the big test, right? We'll see if this thing can actually push back up or not. If it does, it can come back to this resistance zone. I think it's going to have a hard time getting back over this particular bar. That's where all the volume was, and it broke it on the way down. So if it does, let's just do a scenario here. Let's say it bounces. Let's say it comes back up to here. Well, what does that do? It just sets up a big ABCD structure to the downside. And if you measure that guy out, let's see here, 138.50 down to about 125.90. What is that? 7 would be 6.5, I guess it is, right? 6.5 off of that would be 124.50. And if we pull over the weekly, 124.50 would get this back to, I'm not doing the USO, let's put the bonds up. 124.50. Yeah, it would take you right back into the bottom of that bar with the volume on it. No, that can't be right. I'm sorry, I'm doing something wrong. Let's do the numbers one more time. I'm sorry, I did it wrong. 138.50. No wonder. 138.50, 120. And let's just call it 126. That's 12.50. Now, let's take 12.50 off of that. And that, let's just take this low. And that would be 118, 117.60 or so. Now let's go back over here one more time, because this is where it's trying to go. Yeah, that would get it down to and under that bottom of that bar. So we may see, a bounce a little bit higher, maybe into the gap area, and then a push down. whatever it is, it looks to me like it's going to try to set up an ABCD structure to take it lower. And if it does that, that's good for the market short term, right? More than likely the market would rally if the bonds are going down. If we look overseas, it's the same thing over there. I don't see any let up in Europe. Europe just keeps trading higher. Let's bring up the world markets here. And let's take a quick look at it. So if I'll go straight to the German DAX. Brand new highs, right? Spikes up, new highs over the prior day. The CAC looks the same way. French market going to new highs. And the FTSE, the London market, also presses higher, but actually doesn't close at new highs. If I go elsewhere, we're starting to see Japan push again. Japan is over the highs now from earlier this year. This thing is earlier last year. This thing is pressing brand new highs again. The Hong Kong market, even though I'm not getting volumes, you can see it's right up there at the highs. And let's see here. Let's see what else is happening. Let's see what the commodity markets are doing. So the TSX, nothing special. It's still hanging at the highs. And Brazil, which can't catch a break. Let's see if it's actually Brazil's still over those swing point highs. So Brazil's going to actually try to trade a little higher now. So world markets no different. It still looks fine. And then the last thing I would look at, the indexes already are telling me the market wants to go higher. The last thing I look at would be the major sectors. And there, I'm seeing the sort of hang in those sectors that have extended. For example, the SOX, the XLK, the XLY, all these guys are just hanging up here at the highs. XLY actually did a doji 2-bar reversal. That's going to try to come back finally. But then we see some evidence of that rotation, and this is what is going to have to take place for this market to keep pushing. The XLP, for example, can get some moves. We saw the XLV rotation today. This one continued to push higher. We saw XLI last week, didn't get the follow through today. We'll see if that perks back up tomorrow. And we actually saw the IBB pushing again, although the IBB finished on a weak note today as it came back in off a spike high. It did have volume though, so we'll probably see it try to continue. So everywhere I look, it's kind of the same scenario. We'll come back to that thought here in a minute. Let's go to some viewer questions first and see what they look like. Okay, on the viewer questions here, we've got a couple of them tonight. One of them is Zillow. So the question here is, I've looked at the weekly and the daily on Zillow. It looks like it has the ability of a breakout on both time frames. Am I reading this correctly? So you've actually already got the breakout here on the daily. So your swing point highs, there was two of them that broke them both. There's one here, one there, and then you actually had another one down here that broke. So this big wide price spread bar broke them all. Now the problem with this is that usually when you get a big wide price spread bar like this, is it kind of captures price for a while. In other words, if you get that big of a percentage move, it typically is going to carry for 6-7 weeks on a daily before it breaks out again. Now if it's an extremely strong stock, then maybe it will just kind of crawl out the top here, but typically you'll test that top again, kind of fell up there somewhere, come back down, do some consolidation, then eventually take off again. That's the typical case on a wide price spread, high volume spike. And if you read my third book, I talk about that specifically, and that's a lot of times that's how you see longer terms kind of sideways transactions start to take place because of those sorts of spikes. Now this one's not exactly typical because usually it comes at the end of a longer term move, and we don't have that here. But given the size of this, the way it looks, I could make that case that this may do that. Now if we pull over the weekly and look at the weekly. You got that big volume spike, and it's going after that swing point high you're talking about, and it has the volume. Now it got over it, back under it, right? It's consolidating. It will test it again. And so when we look at this daily again, yeah, it's probably going to test that top again. It's just a question of, will it come all the way back down here before it goes back up again, or will you simply get up there to start with? I suspect your drift here is not going to be that big. So, you know, at best, it's going to retest, regen off this last high, which is trying to do right now. And so you can see it's retesting and regenning in it. And so the low of that high is where one would want to look. And that low is, what is that, 117.39. So somewhere in the 117 mark. You still have to risk back to about 108 if you want to get in there. So it's about $9. And you're trying to get to about 133. So, you know, the risk reward gets a little bit better, so you could step into it. You could, you know, leg into it if you will. And if it comes in deeper, you could leg into some more if you want. I don't think it's going to get over that high. It probably will test it and probably fell up there. But there's probably a trade here if you want to make the trade. Later on, yeah, this thing's got what it takes to move on up. And what's happening here is they merged, I think it was last week, with Trulia and became the dominant player in this space for real estate advertisement. So, you know, it would not surprise me to see this go all the way back to these highs eventually. I just think it's going to take a little while to get there. So that's Zillow. Let's look at the other one. The other one is a biotech, pharmaceuticals, pharmacyclics. Pharmacyclic, that's how I want to say pharmaceuticals. So pharmacyclics, PCYC, big spike up. I didn't look back at this, but I suspect that was earnings. Carry through, continuation, another spike up today with big volume. The viewer says he's watching this. Let's see what his question was. I had a good run up today. I held it for a while back in December, sold it. When it went down, it looked like, I looked at it the other day, up 25% year to date, and I jumped back in. You got a nice move today as well. Can it go higher, or am I too late? Well, I would look at this one on the weekly. So if I pull the weekly over, you actually have an ABCD structure here that is just set up and it's just started to take off, right? And that structure takes it up to, looks like about 2.25, let's see here, what do we got? 117, 172, back to 152, so that's 24, yeah, so 224, about 225. So that's, what is that, about 19-20% from here? So I don't think you're I don't think you're too late. As a matter of fact, I think you're in a sweet spot here, because not only did you break out, you know, here as of Friday, you also already had that swing point break on the weekly that's set up this ABCD structure, but you got the break on the monthly as well. And so that says usually 1 to 2 bars minimum, right? Usually 2 to 3 bars extension. And this is a monthly. So you can expect this month to stay up and probably some of next. And so when I look at it from that perspective, no, you're probably not too late. Looks like a pretty good trade to me. Okay, so let's flip back around, get our final thoughts here on what these markets look like they're going to try to do. Well, a lot of technicians will tell you that, you know, you really just look at the charts and you ignore everything else. And though I really look at the charts to tell me what is happening, right, and try to read what they're saying on a day-by-day basis, you know, I'm not oblivious to what is happening in the economy, because, you know, in the end, it really is the fundamentals. What we as technicians say, especially neoclassical, is that the charts is an amalgamation of everything. The fundamentals, the technicals, you know, the sentiment, everything. Because it's all about the price of volume across time. And so, you know, that's what you're looking for, and that's what you're trying to read. And you're trying to read critical points on the chart and how the market behaves in those critical points. And so I want to, just emphasize that one more time here today, using the S&P 500 as the view. This swing point high, when broken, and this had already made a big run. When it's broken, it needs to hold. As a matter of fact, what you'd really like to see it do is just simply leg away and don't even come back, right? That's the best case scenario, in this kind of a scenario. But it didn't do it. And so it tested. And Friday was the big test all the way to the bottom, tested the bottom, could not break it down, which led to the big move up. Nice big strong candle. You can see who took control in that candle, and it wasn't the bears, it was the bulls. And so when you see something like that, right, you see all these tells here, they're telling you that the sellers cannot take control of this market. And it happened again today. They can't take control of the market. That's not a guarantee that it will go up, but that's a pretty good indication about that's what it wants to do. And when you consider that all these tests took place on a retest regen, which is the key spot that you want to look, right? Because what are they doing? They're having to pay up to get in. They have to pay higher and higher prices to get in. Higher prices that have printed for any time, in this case, history. But in many cases, any time that is printed since, some significant amount of time. When that happens, folks, the market's talking to you. It's telling you it wants to try to go higher. Again, there's no guarantees, but that's what it wants to do. Whatever's being thrown at it can't break it down. It wants to go higher. And we already know that we've got an ABCD structure here that projects it up about 30 points more. We want to see it get up there. It's going to try to get up there. Don't discount it too soon. This market is pressing for those targets. Those targets are about 2140 on the S&P. Anywhere from about 2132, I think it is, to about 2140. Okay, well, that's it for tonight. I thank you for joining me. You tell a friend, tell two. I'm LA. This is, and it was, your daily NeoTA wrap. Have yourself a great night. I'll see you next time. Take care. Good night.